Good evening, traders. This is the 11th of April, Sunday night. This is Mike Rabinowitz from MR Strategies. I am providing market analysis for preferably the S&P 500, the Nasdaq, and the Dow. Um, I pretty much concentrate a lot of my trades on the ES. It's kind of my bread and butter market, but I like to use the Dow and the Nasdaq for just a little extra guidance in terms of, you know, you like it all going in the same direction. Um, I want to show you, take a look at all these charts I have on today. I'm going to give a little more in-depth analysis because I want you to see everything playing out together here. Right now you have this daily chart here, right here I'm showing you right now. This is the ES, S&Ps, and I mean, just look at that line. I mean, this thing took off from 39. I take it back. This is goes. This is 38.50. We have rallied almost 300 S&P points. It's a huge move, and in fact, the Dow on top of it has also been following suit. I'll show that to you a little later. But what's more important to pay attention to is, and when a market really accelerates at this pace, and this is pretty much what I call a market extreme acceleration. This is just really just blowing up to the upside. It's not even retracing, and it's kind of getting into thin air. So, it'd be nice to see a retracement. At the end of the day, you got to take what the market gives you, and it is a little overdue for a pullback. And it's good to study the retracement areas just in case they do, because then you're prepared for your day's trading. So I'm just going to briefly show you this chart right here. It's your daily um, S&P chart, and I'm a big advocate of the moving averages. They're super significant, and I'm going to show you this as well on a 15-minute chart. But for the daily, so basically when I'm trading, I'm paying attention to the moving averages on the 15 for the most up-to-date price movement, and then I'm paying attention to the pivots, R1, the daily pivot, S1, your support levels, your resistance levels, when the market starts to push price beyond the moving averages. And when the market starts to get beyond the extremes, which are R1, S1, that's when you want to pay attention to the moving average. And obviously, this market has accelerated so quickly that everything's underneath us. And it's a number you want to pay attention to on a pullback. 4062 is the daily, and I believe it's the 9 MA. These are just uh, basic default and moving averages on your chart. They're easy to plot, and you can see how well it actually is. I just lost the Dow chart. Um, how well this set lines up with your pivots for tomorrow, and it's all the way down here. It's support level 3 in the event that this market sells off tomorrow, and it's good to pay attention to it. You can see also on my chart I'm running this trend line coming in right here at around 4100 in the ES, and obviously this is going to change overnight. I don't know how the price is going to move around, and this trend line is going to move up further depending on how this plays out. But you can see where 4100 comes into play. It was a high overnight on Thursday night, and you can see that there's congestion here late in the day, yes, on Friday, and it was a breakout to the upside. They just jumped all over it and rammed it 20 handles. Why not? I mean, they've been pushing this thing so hard. And I've given you some areas to really pay attention to, and I think it's good to do this because you can see how they line up. You got right here, you got underneath you 4090. You got all this little support right here. You got this high right here, and you can see where it comes in tomorrow. It's S1. So this is why I emphasize the levels, because I believe that as a trader, you're going to get the most successful trades from these locations with probably the least amount of risk, and you're going to have high probability. These are high probability locations. I trade these exclusively. I think they're wonderful. I think great opportunities come from them, and I'm very patient about taking them. And not everybody trades this style. At the end of the day, I think it's good to pay attention to it. and it helps you when the price starts to break out. And you can see down here I have another support area, bunch of highs, nice low, and this 75 area was actually the congestion zone all week last week. That we were in that trading range from 40.75 to 55, and then we ended up closing near it, and I can't recall where it was, but we at the end of the close at one of the days last week we closed around 75. I think it was right here, and we pretty much held it, and we never came back to it. So these are retracement areas that you really like to pay attention to, and that's why I emphasize these locations in terms of my market analysis. And I think it's great for all traders, new and or seasoned traders that have done this for a long time. I lost the Dow chart. I was trying to, because I want to show you how well you can play off each other to get an idea. And I think I had some support in the Dow at about, uh, I believe 33.5. And then I had another one further down around 33. I don't know if this will pop up for you guys. I hope it does. Here's your Dow, daily Dow. So, and a NASDAQ as well. So, and you can see we've made all contract highs, and their moving average is coming in. And these are numbers you want to watch because we're probably due for a pretty good retracement. 33.320. That's about 33.6. That's what 370 Dow points, about 30 some handles in the S&Ps. Uh, that would take us down to about 70, and that would be from here would be S2. So you can see how everything connects a little bit when you see things break out. So, let's take a look at where we're at right now. And I don't know how this thing's going to play out overnight. And we're in a bull trend extreme. And you want to take advantage of the opportunities when they present themselves. And the pivot's been golden all week. And they've been it's so bullish that they continue they don't break down at all. But let's see what happens. Like I said, I think we're a little overdue, and usually they're going to do that earlier in the week as they try to do it. And my philosophy is to really fade the extreme price movement when it gets extended, and you'll see this is when you realize how significant these extreme levels can become. And I like to play what I call the R1 reversal short from these levels if it confirms. Of course, I want to see a little help from the institutions and see the commercials taking advantage of it in the same way. And you'll notice the more often you pay attention to these locations, and if you got the platforms that provide you with that data, you're going to see a really interesting coincidence in terms of their participation and about value. And that's what it's all about. They wanted at value. So you get a little overexcitement overnight, and they push it around, and then by the opening bell, the big boys here just take advantage of it. So higher openings, they have a tendency to sell them off, and lower openings, they have a tendency to buy them up and take advantage of it. But let's just, this thing is just so built up and tight to the upside that you only can just pay attention to what's in front of you. And obviously you want to trade with the trend, but you want to be in the right spots to trade from the trend. You just want to buy. And then, you want to make sure that you got confirmation from it. And that's the key in my analysis is where to get into these opportunities. And I'm going to get rid of this chart and take a look. This is how we traded on Friday. We just blew through everything. And I'm going to give you a little idea of how it has played out off the numbers. And Friday, they didn't give you much. They opened up kind of above the pivot, and they never really came through to it. And in terms of my analysis, or my trading execution, I like to see price blow through it and then reverse back up with confirmation. It doesn't always play out perfectly. You have to use your discretion. You can see Friday was a perfect example. It never pushed through pivot, but it did provide support. And that's the number 40. That's coming in at 40.90, and I showed you where 40.90 comes in. So we're going to want to see how that plays out tomorrow's trading, and then you could just see the acceleration. And it was typical. Friday, the whole week was just jump on it, push it, and they just kept pushing it. No retracements, and I mean this is really pushed hard to the upside, guys. We are so due. But what it will, what I say and what it will do are two different things. You just, you know what, just let the market dictate, and we're here just to take advantage of it in terms of how the commercials are playing it and what you're being provided, and you take advantage of it. It's I believe it's all about looking for the opportunities, having a game plan. How am I going to attack this market if it opens up higher? How am I going to attack this market if it opens up lower? You know what I'm saying? And that's why you pay attention to these levels. And then you take that into consideration and you want to see exactly how price reacts at these levels and whether or not they're showing you signs of resistance, which is what it is, and will the commercials come in and take advantage of that and sell it up there and push it down to where they might want to get involved. Which normally, I like trading from area to area, but you can see these are pretty extended. But it doesn't mean they won't come into play. They will, and I guarantee you they will. But it's always a pivot first, and you want to pay attention to that location. And you can see right now the overnight, it's too early to tell. They're just hovering around the moving averages right now, which are around 41.12. And, I got this trend line right here coming in at 110. This could be broken in the next 15 minutes, so it's really not as relevant. But this one underneath is at 40.90. This is coming. When I have a red trend line, I'm taking it off some pretty extreme lows. So that gives me a pretty good read of support when price gets pushed beyond the trading range and gets to the extremes. And once again, this is here. We're showing 40.90. By the morning, it's going to be higher. It's going to probably come in. In fact, yeah, no, pretty much the same location. A little higher, above 40.94. So let's take a look at this, how this plays out in the morning. And once again, we're in a bull trend extreme. All right, we want the opportunities, the upside when they present themselves, but you don't want to be chasing a market just to chase a market. And you're at these higher highs, making new contract highs. I think the air's thin, and you want to make sure that these are legitimate entries when you take longs way up here, and you want to have the full support of the commercials and the price. Everything's got to be falling in line for you. And of course, momentum, which is the key to all trades. You want the momentum to go with you. And you can see how this played out really nicely at earlier tonight, I believe. Probably right off the open, I think. The overnight open was around 5. And you can just see how look at how price came off at 41.16. It doubled up here, and it rolled all the way down to 0.8. And it's a red to blue. I use the Quick Pop trading platform for my trades. It's a really great platform, but whatever you guys use, I'm sure you're seeing much of the same detail. In this platform, generally, you can see that when price starts to fade, it starts with a blue to a yellow and then a red, and that's usually a slow turn, but a strong power turn is more indicative of the significance of that level. And this one went red to blue at the pivot. So once again, it confirms what the location means to price and how these traders are trading from them. And that's why I strongly emphasize them. I think it's wonderful to use in your trading strategies, and something to consider. So this is the early analysis. My name is Mike Rabinowitz. I have been in the ESP since God, I got there in the 80s, and I was a broker for a handful of years right before the crash in 87, and I went on my own from there, and I traded as a local up until about 2007, and when things started to make the transition to compute, they were start going to computer trading, and they were allowing, a lot more people into the market. It changed the environment tremendously, and paper started to dry up, and the ranges were a little tighter back in the day. Now they get blown out because the game is available to everybody, and this is when you can really. This is why I love trading the extremes, because I just think people don't really see it for what it is, and you can just see how the commercials and institutions take total advantage of the retail trade. And people, it's been such an somewhat of an easy trade in terms of the trend. It's been just straight up. I mean, if I could pull up, let me pull up an ES chart, and I'm not sure these are popping up for you guys, but to get a good idea, this is the ES chart. I mean, this thing, and I mean, my God, we made a low right at the pandemic. Well, oh God, I can't even pull it up. It's so far back. Trust me, it was under 20,000 Dow. That's how far we have moved, guys. 20,000. We actually jammed all the way. Where did we get to hard? We had some pretty vicious retracements. We got up to 3,400 in the ES, and we rolled. Oh, that's in the ES chart. I apologize. And we rolled up really hard. Look at that, 3,400, and we rammed all the way down to 2,200, 2,100, which was pretty close to where the Dow got to about 19,000. So, and then you could just see the run up since and the pullbacks. And this is why I spent a lot of time analyzing price in these little locations. And you look at a bar chart and you're like, oh, you see it doesn't look like much. But when you put a little extra effort into it and pay attention to these highs and these lows, and you're going to see patterns repeat themselves in the market. Market is amazing how it has this tendency to repeat them over and over. Even when you watch an overnight session, you're going to get a similar follow through in the daily session from 8:30 to 3:15, and that's usually Chicago time, 9:30 to 4:30 New York time or East Coast. And obviously the European trade starts at 2 in the morning and rambles till 10:30 a.m. Central. So this is what I do. This is how I provide my analysis. I think it's really wonderful for all types of traders, and this works relatively strong in all markets. I think the market price reacts very well. I mean, just take a look at how markets revolve around the moving averages. I mean, look how many times we have come down to moving averages and have taken off over and over. And obviously, the further you go down, the more significant that they are. And the 200 was a big one, and this was all the way down here. You look at how the 200 right here. I mean, they just look at how they held that, and they just look at that rally in the Dow. Went from 26,000 to 30,000. I mean, so once again you can see the emphasis of the moving averages, and that's why I spent a lot of time reading them, paying attention how price relates to them. They obviously price will when above it, it's going to accelerate, and below it, they're going to probably sell off a little bit, and it has a tendency to keep meandering towards them. And then when you play within, the moving averages, you want to pay attention to your daily trading locations, the pivot. Like I showed you here on Friday, we held the pivot, and we basically blew through everything. And this is a typical example of the acceleration phase. It went from the pivot, got to R1. It tried to roll over, but you could see they couldn't get going. Even with that hard momentum right there, it stalled, and it reversed it and provided what was called an R1 breakout to the upside, which got you to R2. And then once again, they kind of stalled, held R2, and then late in the day, they just jacked it, and they rammed them up almost go all the way back up to R3. So this is our early morning analysis. Obviously, this is going to play out a little differently by 8:30 tomorrow morning, but the purpose of my analysis on a Sunday is for you guys to get an idea of how this all connects and how to utilize the moving averages in terms of your 15 when they get blown out past the significant extremes, S1, R1, whatever it may be. And obviously, all moving averages are underneath us. So until we get a sell-off, nothing's in play in terms of these daily MAs. But you can see where this one comes in at 40.60, and lo and behold, that's S3 tomorrow. I don't know if we're going to get there, but there's a lot of gaps underneath us. I think once the market sells off, it kind of feeds off itself. People are going to start panicking. All the late longs are going to get squeezed out. That's what you got to pay attention to and see how this trades at the higher extremes. If in fact, you get a higher opening. I don't know. We can get a lower opening. We're just going to have to see how that plays out. So this is Sunday night's analysis. This is MR Strategies. And, I hope you like what you guys hear. And feel free to, provide some input. And if you want to know a little further more, we reach at mlbino@aol.com. I'd be glad to talk to you on a personal basis and or work with you in terms of your own personal strategies and how to attack this market if you've traded and have had, have an uneven success. The idea, I'm patient. I don't like trading just to trade. I like to trade the areas because I know that the probabilities of success are much stronger from there and the risk is a little less. And I like that. I tend to leverage from those locations and just not trade. Everybody trades differently. There's trend traders. They take advantage of this bull market or taking every opportunity to get long when it presents itself. I want to be long, but I just want to chase price. I never chase price. I think it's important, all traders, to never chase price. You have a game plan. This is where you want to get in. If you miss it, you got to let it go. That's how I look at it, because another trade will come into play. I guarantee you. There's tons of movement. Be patient. That's what it's all about. Be patient. Wait for your opportunity. Execute. And as you begin to execute and see the consistency with these trades, you're going to be successful. And you could trade this short term and make a little money and be on your way, or you could take this and make a full blown occupation out of it. So it's all up to you guys. So I hope you enjoy my analysis. My name is Mike Rabinowitz, and feel free to get back to me and let me know what you guys think. All right, have a great night. I'll try to check in the morning and see, and we'll see how to play it from there. But this is the big picture right here, right now, and that's what I'm about, the big picture. That's why I spend so much time looking over these charts and seeing where can price go. This way, I'm prepared to when it gets there. How do I react from there? And you're going to see how well and how often the institutions take advantage of these locations. So that's what it's about. And good luck with your trading this week. And feel free to reach out, guys. Have a great night. Take care.